Chapter 1: Introduction to Governmental and Not-for-Profit Organizations. First of all, why do we have to study government and not-for-profit accounting? 1. Governments and nonprofit organizations hire accountants. They may become your employer in the near future. 2. CPA firms and states engage accountants to perform their audits. You may audit the financial statements for the City of LA some point in your life. 3. Even if none of the above applies to you, as citizens and donors, we wish to better understand how taxes and charitable donations are used. Environment for government and nonprofit sector is different from the environment for-profit companies. First, potential for longevity. Governments rarely go out of business. This long-term view of operations changes the focus of accounting to a longer-term focus on the sustainability of services and the ability to meet future demands. Second, relationship with stakeholders is different. For-profit companies exist to maximize shareholders' profits. However, governments have an obligation to demonstrate accountability for public funds. Lastly, the role of the budget is more emphasized in the government and nonprofit sector. Government budgets often carry the authority of law and prevent public officials from spending outside their budgetary authority. Accounting standards that we have been learning in intermediate accounting are set by FASB, Financial Accounting Standards Board. FASB still sets accounting standards for private not-for-profit organizations. However, accounting standards that we mainly focus during this class are set by GASB, Governmental Accounting Standards Board. There is Federal Accounting Standard Advisory Board that sets the accounting rules for the federal government. Recommendations by the FASB are reviewed and become effective unless objected to by one of the principals, the U.S. Government Accountability Office, or GAO, U.S. Department of the Treasury, or the U.S. Office of Management and Budget, OMB. GAO is an investigative arm of Congress charged with examining matters relating to the receipt and payment of public funds. U.S. Treasury Department is responsible for managing government's revenues. OMB is the largest executive office in the President's office and produces the President's budget. The GASB was established in 1984. In 1987, the GASB issued its Concept Statement Number 1, Objectives of Financial Reporting for State and Local Governments. In essence, citizens have a right to know why resources are being raised and how they will be used. According to Concept Statement Number 1, government financial statements allow comparison of actual with budgeted results, help users assess financial condition and results of operations, show compliance with laws, rules, and regulations, and assist in evaluating efficiency and effectiveness. GASB Concept Statement Number 3 introduces the communication methods in general purpose external financial reports that contain basic financial statements, defines methods of presentation information in financial reports, and presents the following disclosure hierarchy. 1. Basic financial statements. 2. Notes to the financial statement. 3. Required supplementary information. And 4. Other supplementary information. In essence, GASB's objectives are different from FASB's objectives in that they put more emphasis on the budget, legal compliance, and efficiency and effectiveness measures other than just net income. A comprehensive annual financial report, or CAFR, is the government's official annual report prepared and published as a matter of public record. Similar to 10-Ks for-profit firms, the CAFR contains introductory material, an auditor's report, certain RSI, schedules necessary to demonstrate legal compliance, and statistical tables, in addition to the basic financial statements and other statements. Governments have two levels of financial statement reporting. The first is the fund basis financial statements. Fund basis statements are presented for three categories of activities: governmental, proprietary, and fiduciary. These categories will be discussed in detail later. It is not easy for the financial statement user to pull the disaggregated information together across different kinds of funds. Therefore, governments are also required to present government-wide financial statements. Internal accounting still tends to emphasize individual funds, while government-wide reports are an attempt to aggregate data into a format more familiar to users. The government-wide financial statements present an overall picture of the financial position and results of operations of the government. Two government-wide financial statements are Statement of Net Position, which is similar to balance sheet under FASB, and Statement of Activities, which is similar to income statement under FASB. Before we begin discussing the types of funds, we'd better know what a fund is. A fund represents a part of the activities of an organization. You can consider a fund an accounting entity that has a self-balancing set of accounts that reflects the assets, liabilities, net position, and changes in those balances. A fund is a necessary and effective tool to segregate resources for specific activities in such a way to ensure compliance with appropriate regulations or restrictions. State and local governments prepare their financial reports using two general accounting methods. One method assumes an economic resources measurement focus and the accrual basis of accounting, and the other method assumes a flow of current financial resources measurement focus and modified accrual basis of accounting. Measurement focus refers to what items are being reported in the financial statements. Basis of accounting determines when transactions and events are recognized in the accounting records. The government-wide financial statements and the fund financial statements for proprietary funds and fiduciary funds use the economic resources measurement focus and accrual basis of accounting. The fund statements for governmental funds are presented using the current financial resources measurement focus and modified accrual basis of accounting. Revenues and expense recognition principles are different under accrual versus modified accrual basis of accounting. Under accrual basis of accounting, as we know, revenues are recognized when they are earned and expenses are recognized when related goods or services are used up. Under modified accrual basis of accounting, revenues are generally recognized when measurable and available to finance the expenditures of the current period. Also, expenditures are recognized in the period in which the fund liability is incurred. Under modified accrual, we use the term expenditures rather than expenses. Equipment purchases are treated as expenditures as soon as you are obligated to pay or when the goods arrive. Overview of fund financial statements. 3 categories of funds are governmental, proprietary, and fiduciary funds. Governmental funds account for government's general citizen services. 2 required statements for governmental funds are balance sheet and statement of revenues, expenditures, and changes in fund balance. Proprietary funds account for business-like activities such as water utility. 3 required statements for proprietary funds are statement of net position, statement of revenues, expenses, and changes in fund net position, and statement of cash flows. Fiduciary funds account for money in trust for others. 2 required statements for fiduciary funds are statement of fiduciary net position and statement of changes in fiduciary net position. Governmental type balance sheet generally show only short-term assets and liabilities because of its current resources measurement focus. Proprietary type balance sheet shows both short-term and long-term assets and liabilities because proprietary funds use economic resources measurement focus. Government-wide financial statements must report both short-term and long-term assets and liabilities in the statement of net position. Once again, state and local governments use 11 different fund types. These fund types are organized into 3 categories: governmental funds, proprietary funds, and fiduciary funds. Governmental funds are used for activities that are largely unique to the government environment. Proprietary funds are used for business-type activities. Lastly, fiduciary funds are used for activities where governments act as an agent or trustees of monies that generally belong to other parties. Let's take a look at the types of each funds. First, governmental funds. The general fund accounts for most of the basic services provided by the government. Technically, it accounts for and reports all financial resources not accounted for and reported in another fund. The capital project funds account for and report financial resources that are restricted, committed, or assigned to expenditures for capital outlays. As such, it accounts for the purchase or construction of major capital improvements. The debt service funds account for and report financial resources that are restricted, committed, or assigned to expenditure for principal and interest. Special revenue funds account for and report the proceeds of special revenue sources that are restricted or committed to expenditure for a specified purpose other than debt service or capital projects. These include activities funded by federal or state grants or by taxes specifically restricted to certain activities. Lastly, permanent funds account for and report resources that are restricted to the extent that only earnings and not principal may be used for purposes that support the reporting government's programs. Second, proprietary funds. Two types of funds used by state and local governments are classified as proprietary funds. This term indicates that the funds are used to account for a government's ongoing organizations and activities that are similar to those often found in the commercial sector. An enterprise fund is a fund established for the purpose of measuring net income for a governmental department providing goods or services primarily to outside consumers, in which it is the intent of the government that the department operate on a cost recovery or profitable basis. An internal service fund is a fund established for the purpose of measuring net income for a governmental department providing services primarily to other departments or agencies within the government, in which it is the intent of the government that the department operates on a cost reimbursement basis. Third, fiduciary funds. Fiduciary funds are sometimes known as trust and agency funds. Fiduciary funds account for resources for which the government is acting as a collecting or disbursing agent or as a trustee. Agency funds are used to account for situations in which the government is acting as collecting, disbursing agent. An example would be a county tax agency fund, where the county collects and disburses property taxes for other taxing units within the county, such as independent school districts. Investment trust funds account for the external portion of investment pools reported by the sponsoring government. Pension funds are used to account for pension and employee benefit funds for which the governmental unit is the trustee. Private purpose trust funds report all other trust arrangements under which principal and income benefit individuals, private organizations, or other governments. How many funds are needed then? Each government must have one and only one general fund. However, it may not need one of every fund type. In some cases, it will need more than one of just some types of funds. If it has 4 building projects, for example, it might use 4 capital project funds or just choose to combine all 4 in one fund. Thus, an exact number of funds depends on judgments. Every government should adopt an annual budget. A budget, when adopted according to procedures specified in state laws, is binding upon the administrators of a government. Accordingly, a distinctive characteristic of governmental accounting is the formal reporting of the legally approved budget compared with actual results for the general fund and all major special revenue funds that have a legally adopted annual budget.